One of the biggest warning signs for the next big print just happened. While they're distracting you with emails, islands, aliens, and the Dow being at 50K, something just happened behind the scenes that affects everybody in America. $900 billion was just stripped away from the US government. And GDP numbers just signal that the economy is in real trouble. And you know what this means? The money printer is about to go burr. Bitcoiners have already predicted what's happening now and what's happening next. In today's episode, we're gonna break down this important news and why Bitcoiners who might look like Punch right now are about to explode into a whole different monster when the US government turns on the money printer. Are you ready? This is Dante Cook with Bitcoin Simply. Let's go.
$900 billion in tariffs, unless the Supreme Court said you can't do it. Can you believe it?
Can you believe it? Well, yeah, we can believe it. The US Supreme Court did in fact just say that Donald Trump's tariffs were illegal. This has been a massive blow to the Trump administration, who's been reducing deficits for the first time since the Clinton administration, mainly thanks to tariffs. The US Supreme Court ruled 6-3, saying that Donald Trump's tariffs and the use of the IEEPA tariff mandate was illegal. When asked late last year how this would impact his campaign and his economic proposals, well, he said that if the Supreme Court ruled this way, it would be devastating to America.
What happens to your economic plan if the Supreme Court invalidates your tariffs?
I think our country would be immeasurably hurt. I think our economy will go to hell. Look, because of tariffs, we have the highest stock market we've ever had. Because of tariffs, 401ks at the highest level and this is millions and millions of people that we've ever had, 401ks. I think it's the most important subject discussed by the Supreme Court in 100 years.
The most important discussion that the United States Supreme Court is having in 100 years is a big deal. Here's how big of a deal this is. The IEEPA tariff revenue that the United States government collected was over 50% of all of the revenue that they got from tariffs. This means that over $135 billion would need to be returned to importers. And the problem isn't just the ruling. This is a logistical nightmare.
Justices Thomas and Alito says this: the court's decision is likely to generate serious practical consequences in the near term. One issue is the refunds. Refunds of billions of dollars would have significant consequences for the U.S. Treasury, but the court today says nothing about whether, and if so, how the government should go about returning the billions of dollars it's collected from importers. That process is likely to be a mess, as was acknowledged at oral arguments.
And to make matters worse, GDP came in at just 1.4%. when it was expected to come in at 3%. This is the second worst print in 2 years. This is a clear sign that the United States economy is struggling. But here's what makes this even worse. The PCE price index and the core PCE numbers came in higher than expected. So this means that the cost of goods and services are also going up while GDP is struggling. And to make matters worse, US hiring is at recession levels right now. Couple this with AI disruption, and we have a cocktail for a disaster for the Fed to sip on. So what does this mean in a nutshell? The US government is going to have to print. Let me explain what I mean. Foreign countries are not buying US treasuries. The stablecoin bill is gridlocked in Congress, meaning they can't use stablecoins as a lever to raise and issue more debt. The economy is slowing, inflation is picking up, and the United States government just lost one of its highest forms and newest sources of revenue. So what's the option? What's the alternative that the Treasury and the Fed have? If they can't raise money, they can't collect it from other countries, and taxing US citizens is not a viable strategy, well, the only option and means is to print money. The United States government is effectively a zombie company. Listen to how James Lavish explains this.
If the United States was a company on the floor of the New York Stock Exchange, we would call it a zombie company. And the reason for that is that they have to borrow, they have to issue debt, and they have to borrow money just to pay interest on the old debt. It's basically dead man walking. And that's the situation we're in America. And so all of that gets to the whole point, which is the only way that they can deal with this debt is to allow for high perpetual structural inflation. And that will cause GDP to go up nominally. That'll create more dollars in the economy, but those dollars will be worth less to consumers. However, they'll help pay down the old debt that is based in those old dollars. And so you have these new dollars that are worth less. There's a whole lot more of them. They print money. They just create liquidity. They expand the balance sheet of the Fed by printing money with the Treasury, and they use those dollars to create more GDP nominally and pay down the debt. And we all know that the main driver of inflation is basically the expansion of the money supply. And that is how we come to Bitcoin and why we think it is so important in an investor's playbook in the future.
Here's another great clip from Saifedean, who explains this same thing in different language.
Basically, nothing stops this train, as Ledn always says, and not even Tether. Tether cannot fix what a century of fiat democracy ruined. There's been a century of inflation, a century of debt, a century of liabilities piled up, and you're not just going to find an enormous number of bag holders that are going to be able to buy this. Ultimately, I think another point that is often ignored here is that a lot of the demand that is coming for Tether is displaced demand. A lot of it is coming from people who are giving up on financial instruments that would have demanded treasuries otherwise. In other words, when a currency collapses and people in that country start using Tether, they're decreasing the demand for treasuries by the central bank of the government whose currency has collapsed. So it's not entirely new demand. And even if it were entirely new demand, even if we assume that 80% of it, as we did in the previous example, we still see that the impact on the debt situation in the US is not likely to be significant. It's not likely to make a significant difference because the amount of budget deficit is enormous and it's continuing to grow, and the debt and the interest are continuing to grow, and it won't touch the entitlements, it won't touch the defense spending, and so therefore all of this new extra demand is not really going to make a big difference. It's ultimately no way to escape the inevitable fate of default, devaluation, or default by devaluation.
The United States government is backed into the inevitable corner that Bitcoiners have always talked about. And this is why we don't sell our Bitcoin. This is why we've worked with Ledn, the leader in Bitcoin-backed loans. And oh, by the way, Ledn is the first Bitcoin-backed instrument to be rated by the S&P, the largest global credit rating agency. Ledn has spent 8 years perfecting their service, and that's why our global credit rating agency will back that their bonds are legit. This was an institutional credit review that reflects the robustness of their structure in their platform, which is why we work with them. You can borrow up to 50% loan to value to your Bitcoin without selling your Bitcoin. Fiat comes into your account in less than 6 hours, and the application takes just 2 minutes. They are bringing investment grade solutions and backing to the Bitcoin industry and to your Bitcoin stack. Don't sell your Bitcoin. Go to learn.ledn.io/simply to get started with the first S&P-backed Bitcoin-backed debt instrument. Go to learn.ledn.io/simply to get started. One of the ways you can continue to be sovereign in your journey is by removing your Bitcoin from an exchange and becoming your own bank. It's hard to invest in these sorts of things at first because you don't really need it all the time until you really do. Work with a coach to understand exactly how to set up a node, how to have your private keys, how to remove it from exchanges, and how to be fully sovereign. Because there is going to come a time when you're going to need it and you're going to want to have the resources and capability to do it. Schedule a free 30-minute meeting with the team at thebitcoinway.com/simply to get started. One of the biggest disappointments that anyone who's had in Bitcoin, especially since coming in at 2021, because that's when we made an all-time high, 69,420 if those people there remember. And since then, we've been flat. Ups and downs, hitting a new all-time high of 126K, but largely, people have missed the whole lore of Bitcoin running up 10x, 100x. And yeah, this might have to do somewhat right now with there being price suppression coming from the big ETF players. Listen to what the CEO of Bitcoin IRA had to say with a conversation on Natalie Brunell about this sort of thing happening.
Do you think that there's been some price suppression? I can't avoid that sort of question online right now, especially from the Bitcoin community on X. They think that there's some sort of manipulation to the downside, which is kind of ironic, right? They never claim it when we're flying high to a new all-time high. It's not being manipulated up, but there's this real sense that because the financial institutions are in, because there's this like new layer of sort of the suits or Wall Street, that it's preventing Bitcoin's rise due to all these direct derivatives and layers on top of it.
Yeah, I think when you add the ability to short it, right, and just that's simply enough. The ability to short it, to put in orders, the T-whopping companionship that they're doing between. There's a lot of moving parts once you get to that layer. And I'm not a tin hat guy, but let's think about it. If every institution wants to be the next Michael Saylor, and every sovereign nation wants to realizes the balance sheet is important, even though they talked about it a bunch a year ago at the Bitcoin conference, everybody was talking about it, and then all of a sudden they got quiet. Would you tell the world you're about to buy $100 million of Bitcoin? I wouldn't, because you want to control the price. Now, is there manipulation? Are we talking Jamie Dimon and JP Morgan with the silver shorts that they were doing? I don't know if it's at that level. I think that one of the things I love about Bitcoin is we have the blockchain to tell us the truth. Other than when you look at stocks, you come from the traditional side, that stuff can be manipulated left and right all day, every day. It's interesting. I do think that because of the number of entrants that are coming in that are big players, there may be suppression is probably the right word, not manipulation. There may be some suppression or news that hasn't come out. You know, Saylor calls us and goes, hey, guess what? I just bought another $75 million worth of Bitcoin yesterday. Not a lot of other people are saying that yet. And they may be averaging their way in and see where their price points can be at. Because nobody wants to say, hey, we're going to buy $100 million, watch it run to 126,000 and then have to buy at that price. That's just common sense.
If that is happening, you have to understand that you can't be shaken out, and you have to have a longer term time horizon. For long stretches of time, Bitcoin does nothing. Actually, on a monthly basis, it tends to go down more than it goes up. But in short stretches of time, 9 days, 10 days, 23 days, 30 days, if you look at this chart, Bitcoin makes explosive moves to the upside. Upside moves that you aren't going to want to miss. Bitcoin is an asset without an issuer. Bitcoin is an asset without centralization. Bitcoin is an asset that makes us all truly sovereign. Bitcoin is an asset that is going to benefit in a large way when the U.S. Treasury and the U.S. Fed realize that they are a zombie corporation backed into a corner with tariff revenue just being stripped from them by the Supreme Court. This is massive news for Bitcoin, and you shouldn't underestimate the impact that this is going to have on your Bitcoin stack and your portfolio. One of the ways you can continue to diversify in Bitcoin is not by just buying spot Bitcoin or borrowing against your Bitcoin, but also stacking it through Bitcoin mining. But don't worry about buying machines. Where you're going to find your Bitcoin, how am I going to repair my machine, what electricity and energy costs am I going to get? Work with the team at SAS Mining. Members of their team will get on the phone with you, talk with you about what Bitcoin machine fits your needs and how you can structure this in a way that you get sats directly to your wallet while you sleep. No middlemen, no markups. Work with the team at SAS Mining and benefit from when the printer does turn on. This is Dante Cook with Bitcoin Simply. And as always, if you get value from this show, do subscribe and tell your friends. Happy stacking.